Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Friday, the 7th of November. Starting off with the S&P, which is drifting, actually falling towards the floor of that rising trend channel from back in April. It would be quite a shock if we emerged from out of it. But at the moment, we've got the 50-day line there just below here at around 66.80 in the floor of the channel in that kind of area. So hopefully that will provide support for this market, maybe towards 66.60. In fact, that line there from back in April. RSI has now fallen below the neutral 50 level, so we are on alert not only for a move to the floor of the channel there, but also actually back down to October support in the 65.50 area, that 65.50 zone, a key level for this market. In terms of getting ourselves out of jail, we need to see 6,800 plus really pretty quickly in order to reverse the topping out that we've had below the top of that rising trend channel from April. The line there, resistance line projection pointing towards 7,000, which I suppose would be a best case scenario target currently for the end of the year if we can stay above that 66.60 zone. The Nasdaq is next, and obviously here we have fears of an AI boom or bubble rather, bubble bursting. And here you can see we've got the island top there, so gapping up on the left-hand side, gapping down on the right. Here with the floor of the channel and the 50-day moving average 24,600, which is probably now with the RSI falling below neutral 50, the minimum we would expect on the downside, minimum we expect to get away with on the downside. Obviously below that, you've got the main 24,000 support area, which has been holding sway since back in the middle of September. Need to get back above that gap there around 25,800 to give us a chance of heading up to the red resistance line projection, 26,800 by the end of the year. Obviously, so that could be the end of this month, but we need to stay above the floor of that channel and at the right side of that 50-day moving average. Moving on to the stocks and some interesting choices today, mostly from ones that we looked at before, but this one we haven't. So Coherent Group, top of the channel there, heading for the $1.80 plus area, and rather the $180 plus area, and we're looking for that hopefully by the end of this month, while we remain above the low of yesterday at 150 on an end of day close basis. In fact, could get a bit higher than up to $185 if we behave ourselves. We looked at Datadog before, and here it's back again, hitting the top of that channel there towards the $190 zone. In fact, yesterday's high 194, end of day close above 195, let's say. We could be looking for a fresh leg to the upside as high as $240 by the end of this month. The key here, though, is supposed to staying above yesterday's low, 177 on an end of day close basis. EZGO is next, and here we've got a situation where the shares have managed to, or are trying to revive themselves. Obviously, it's been a bit of a staggered situation with a gap down, massive gap down, then a gap higher just at the turn of the month. Current situation is we'd like to see the shares remain above the 50-day moving average there at 15 cents. If they can do that, I've got another chance of hitting that 200-day line at 32 cents, however, briefly after yesterday's attempt at doing so. FRG is next, which is otherwise known as Forge Global. And here you can see that we've got a situation where we've got the rising trend channel there, and the top of the channel there heading for has been heading for the 30 was heading for the $30 zone. Obviously, we've blown through that and have an upper parallel there heading as high as $45. That obviously is what we're looking for as a near-term target, but really the highlight here is that we were in a rising trend channel base and looking at 30, and we got rather more than that. So full marks on the charting, or at least full marks to the stock for delivering the charting success there. Next on the list is Mativ, and here gapping up through the 50-day line and recent resistance around the $11 zone. Above that, we're looking for the upper parallel of that rising trend channel that we had from February. That was around $10 initial target, and hopefully could get up to as high as $16 by the end of this month. Moving along the list, and here we've got a stock which is new to us. It is Orion Energy, and here rising trend channel there, nice bounce, a bear trap rebound from below the floor of the channel there around the $8.70 zone. Looking at the top of the channel there at $12 by the end of this month, or hopefully even sooner than that. We've got the 50 and 200-day lines both rising at the moment. SiTime is next, or SiTime is next. Here we've got a rising trend channel, top of the channel there, heading for $400, $420 in fact. We're looking for that while we're above recent broken resistance around the 320 level, so hopefully the shares can maintain that over the near term. Finishing off with the last two. The first one is coming up here in terms of Skyline, and here you can see that the shares breaking out of the recent range and breaking through the 200-day moving average at $79. Next level up, I suppose, is the top of the gap there at $84, but we're hoping, I think, for May resistance at 95, perhaps as soon as the end of next month, while we remain above or remain on the right side of $78, $79. Last on the list is UroGen, and here, nice rebound off a rising 50-day moving average there at $18 above that. Looking for $30 at the top of that rising trend channel from August last year, and looking for that hopefully as soon as the end of this month, if we can stay above recent broken resistance in the $21 zone. That's it for me today. More updates over the weekend.